Welcome to Charts Today. My name's David Linton. We're a sea of red on the screen here this morning, and that's just really after big falls on the Nasdaq last night. And we're seeing we had a massive leap here in the VIX volatility. Remembering this is my weekly, my daily, and my 60-minute chart, my long-term, medium-term, and short-term view of the market with the corresponding point and figure targets. So we had this big move in January, not such a big move yesterday, but still taking the VIX into new territory, having been really quite flat for a couple of weeks. So just markets turning quite fearful and a lot of red on the screen. Let's just take a look at what the charts are telling us. So first of all, the dollar index actually rose yesterday. So we're seeing the dollar actually moving to short-term bullish, seen as a little bit of a safe haven when things are falling. So dollar stronger on the short-term chart, but of course still nowhere near being able to say that this is a bottom on the longer-term chart, and still very bearish there. That meant that the euro fell back against that stronger dollar, just holding on to its bull trend by bouncing on the cloud here on the lagging line. If we look at sterling, having been well above the 140 mark, having touched 142, fallen back quite heavily, just really a sign that we're retracing some of that big move that we've seen in recent weeks. Of course, the medium-term trend is still very bullish against the dollar for sterling. The euro, sterling against the euro, sitting at 149, 1480. So again, holding on to its bull trend in the medium term, but short term we're just seeing a sell-off in sterling overall. Bitcoin actually fell about 3%, just nudging new lows here. So this is a bit of a risk-on trade, if you like, and we're seeing here that we've got downside targets potentially to 37,000. We're at 45 at the moment, 35,000 on this medium-term chart. Of course, the long-term target of $107,000 is still very much in train. We'd have to go right the way back to unwind that. But for the moment, we've got a very long-term bullish picture, but a short-term bearish picture. The S&P 500 index was down 2.5%. The S&P now yielding less than the 10-year bond yield on terms of the dividend of stocks in the S&P. We'll take a look at the yield. The long-term picture is still bullish. We've got upside targets and really no clear signs of a downside potential. We did have a little mini downside target which is given a met, but we are just seeing a bit of volatility creeping in, not really showing up in the weekly chart. So the long-term picture is unchanged. The short-term picture, of course, is looking more bearish. And if we look at the Nasdaq, that's looking more bearish. So tech has really struggled this last week, and we are just seeing it pushing to new lows. Again, a shortage of downside targets. There will be one off this thrust down and off these as well, but they need to lock first. The futures this morning in the US, we've got the S&P future up 0.3%. The Nasdaq E-mini up 0.3%. That is looking very much like a dead cat bounce. We've been down 3% and we're now up 0.3%. So not much of a reaction there to yesterday's falls in terms of a buying opportunity. So markets remain cautious. Looking at the Ftse future, that's down 0.4%. We did fall quite heavily yesterday in Europe as we saw the US falling. The DAX in Germany, the cash market, sinking lower, but has recovered a bit this morning and still looking pretty good on the medium and long-term charts. But we do have a downside potential of about 2.7%. The CAC Courant down by 0.75%. Again, just holding on, but medium and short term, it's still looking as bad as the US indices. But of course, if Wall Street falls, Europe will catch a cold. We saw Japan down 3.3%. That's putting it into short-term bearish territory. We have been making 30-year highs on Japan, so no big surprises there. If we take a look at the Hang Seng, that was hit pretty hard, actually, down 3.6%. So a very big, heavy weekly candle there. So looking a little bit more worrying for Asian markets. And China was down 2%. Normally, China is quite happy to buck the US trend, but we're seeing pretty much a sell-off across the board, really. And Sensex in India down 3%. It's had an amazing run, so no big surprises there, but taking it to short-term bearish, and the Aussie market down 2.3%. So we're seeing there quite a big move down in the short-term targets, and of course nowhere near making new highs yet. Of course, the big expectation would be that gold would rise in a time like that, but that strong dollar has had an impact, and gold is back to testing this level. 1764 is the level, and we have been through that this morning, so this is really quite a key time for gold bulls. We've got downside targets here and big upside ones as well, so it looks like gold might well just pull back even further, but the long-term trend is still very much in train. The 1764 level is quite key though, and if we break below that and stay below that for too long, we might see some of these downside targets coming into play. Silver down 1.6%, turning it short-term bearish. Again, strong dollar is having an impact there, and we are just seeing a little bit of a sell everything mentality in yesterday's market. Copper was down 1.5%, and that's been a big riser. So we're just seeing a setback. Of course, the big news yesterday was that bond yields were hitting those targets. We had targets on the chart to 153, 154. Haven't quite got there yet. We had one at 150 on the short-term target. We smashed through that yesterday. We've got a pullback target now to 134. So bond markets are really starting to become very volatile. And we see here from the chart, steady trend and then a curvature up. So that's going to create quite a lot of volatility. So if you're trading bonds, keep a very close eye on the short-term targets. And if we look at the 30-year T-bond, that's been really quite a surprise, nudging 240 yesterday, 2.4%. But we're actually still very much in a sort of clear, steady trend, targets to the higher side. Remembering that for the 10-year bond yield to be in a long-term uptrend on the yield, we need to break around 3%. So it's a lot of work still to be done. We've got to be breaking those levels seen back in 2018 really for the long-term 20-year trend to be reversed. I did do a post on LinkedIn about that, so that's quite key. Just taking a look at some of the tech majors. We've got Apple. They're falling pretty steadily, actually. Amazon was down over 3%. Hasn't been seen a level since this high in September, so really starting to look a little bit worrying there. Downside targets, we'll have another one building in here. Alphabet, much the same picture, starting to turn bearish, and Microsoft and Facebook were each off quite heavily yesterday. Microsoft in bearish territory in the short-term chart, and Facebook, given all the news flow we've seen on Facebook lately, no big surprises that we are bearish on these medium and long-term trends with downside potential targets, so keep an eye on those. The energy mix is looking, gas is actually up this morning, power is up very slightly, but crude oil following the sentiment. Remembering this is my daily charts, and then my 60-minute targets, my 1-minute targets, and then 60-minute cloud chart. And we can see short term we're seeing a little bit of a sell-off in crude, so no big surprises there. Most other assets falling. Emissions have been really following quite closely market sentiment, and we're seeing here they're just in short-term bearish territory. That little downside target met. If you're trading emissions, you need those 1-minute targets. They're going to be pretty key. German power actually looking a little bit stronger this week than we expected, but again, no clear short-term targets on the 1 minute. Watch your OTC data for targets there. Just a quick look at what's going on with the coronavirus statistics. New cases rising in France. That's a little bit worrying, and we're seeing the US starting to pick up a little bit too. UK continues to fall. Germany flat. Looking at the new deaths, we're seeing again the US just ticking up here, which is a little bit worrying. Germany falling away heavily with their restrictions. UK continuing to fall as well. Hospitalizations and ICU units, we're seeing here France just not moving down, and that is a little bit of a concern for continental Europe. UK and US seeing their hospitalizations coming well under control, and of course the vaccine rates very high in the UK, high in the US, and still low in Europe, so no real changes there. That's it for today. Have a great weekend. Until Monday, happy charting. See you then.